Foreign individuals or foreign entities are generally taxed in two major ways on their U.S. income. Where a foreign individual is deemed to be carrying on a U.S. trade or business and they have effectively connected income, to be defined in a minute, they are generally taxed in the same manner as a U.S. taxpayer, based on net income, not gross, net, which is net is defined as gross income minus all applicable expenses, effectively connected expenses, to come up with a net number, and that is subjected to the same graduated tax brackets as a U.S. taxpayer. Where we're discussing a foreign entity, a foreign corporation for that matter, that's running a branch within the United States. Okay, you got a foreign corporation running a U.S. branch. That U.S. branch, if it's engaged in a U.S. trade or business and has effectively connected income, will be taxed at net graduated tax brackets the same as a U.S. entity would be. The only difference is where you've got a foreign corporation that's running a branch, that branch may be subjected to the branch profits tax in addition to the income tax at the entity level. I'll discuss what the branch profits tax is a little bit later. Where a non-resident individual or a foreign entity is generating income in the United States that is deemed not to be from a trade or business and not effectively connected with the U.S. trade or business, that income is taxed at a flat 30% rate on the gross income. All related expenses are ignored. Generally, this type of income is considered FDAP, fixed, determinable, and periodic. It's taxed at a flat 30% rate on gross income. All expenses are ignored. And this 30% rate can be modified by treaty. A third way in which a non-resident alien or non-resident entity could be taxed. Certain classes of fixed, determinable, and periodic income are excluded from taxation by the Internal Revenue Code, specifically to foreign taxpayers and foreign entities for policy reasons. For example, interest income. Certain types of interest income are excluded from U.S. taxation with the idea that if funds are loaned in the United States, that's good for the U.S. economy. To not tax a foreigner lending into the United States is expected to generate more loans in the United States, which is supposed to increase the economy. So for policy reasons, certain types of interest income are not taxed in the United States by a foreigner.